Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can notice is that we have a market which has just rejected exactly the zone that we have identified in a last week's analysis. In fact, what we identified is that exactly from here, all this previous rejection to the upside was created, and the market retraced all the way down to this area here, once again, with the creation of this M pattern. And in fact, after such move, you would expect the market to create a rejection to the upside for two main reasons. The first one is that we had the M pattern. So after the creation of an M pattern, you expect a move higher and completion of the neckline. And the second reason is that since this was previous demand and support, this should continue to act as demand and support when it gets tested from the upside. So also, for this reason, we could expect this rejection to the upside, which is in fact exactly what the market just gave us. Now, we currently have to identify the new structure that the market is providing, and the nearest level is this one here. In fact, this is the neckline of the M pattern, so also the previous support turned resistance here. Now, we still have 17 days and 6 hours to go before this candle here will close. If this candle will close above that zone, then this previous support will once again be turned support. However, if it closes below the area, this previous support will have acted as resistance and the market will have respected it as resistance. However, if we drop down on the weekly time frame, what we can notice is that from a weekly standpoint, the structure has already been broken to the upside. In fact, we did have the creation of this overextended M pattern. We expected a rejection higher, and that is exactly what the market gave us. And now we have broken back above this previous weekly support, which was support here and support here, which now that the market has broken into the upside is once again acting as support here. So what we could expect in a situation like this is for the market to go and retest this previous resistance to support and then to reject the level to the upside. So from a weekly standpoint, everything looks extremely bullish. Dropping down on the daily time frame, what do we have? Now, from a daily perspective, this is where things get quite interesting. Now, first of all, I did speak about gold a few days ago when the market was here and explained all the reasons for which from here we could expect this rejection to the upside, which is in fact exactly what the market gave us. And then I made another breakdown after the creation of this red candle, explaining all the reasons for which we could expect a retest of this level as support. And in fact, that is exactly what the market did. The market went and tested its zone and now it rejected it to the upside very aggressively. And by the way, I will link that previous analysis in the description so you can go and check it out for more free education. Now, also from a daily perspective, what we can notice is that all structure has been broken. This previous support is now once again acting as support. And what we could expect is for the market to go and retest this level that was acting as support in all these multiple occasions, and then to reject it to the upside. Why? Because we could expect more institutional longing inside of this zone. This is the area, the support zone, inside of which we could expect institutional longing, which at that point would further increase the probabilities of a potential move higher. Now, why do I expect institutions to start adding longs? Because they just created one of the most common manipulations. In fact, if we check the COT data for gold, what we can see is that with the last report, actually net positions got decreased. However, if we look closer, we can see that they were forced to report their positioning on the 10th. Now the 10th is exactly here. This is the 10th of October, the creation of this red candle here. Now, after they were forced to essentially report their positions, that candle closed red. So clearly they have been dumping their positions this day. And in fact, we can see how they opened 11.7k shorts and closed 8,000 longs. However, just the day after, the market started pushing to the upside aggressively. So clearly they were just trying to hide their positioning by shorting and closing longs on the day of the reporting, and then the day after, the trend to the upside just resumed. And now, with the creation of this huge candle, it is extremely likely that with the next report, we will see massive longs added and shorts getting closed, considering that already we have more longs than shorts, with 220k longs compared to only 148k shorts. So there is a very high probability that now they have clearly entered. On the retest of the support area, we could see more institutional longing. At that point, further increasing the probabilities of a potential rejection to the upside away from the zone. We can also notice that as we have the creation of an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And what we can see is that we have the 0.3 to 50% and 0.618 Fibonacci retracements all lining up exactly inside of this area, creating confluence of support inside of this zone that we could in fact expect this market to test and then to reject to the upside. So if the market will actually retrace to this area, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentifxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the vet market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97, one-time payment. And if you scroll lower, you will see that even though there is still time to join, the time is starting to expire before price goes back to normal. So I really suggest to go and check it out as soon as possible. You also find the link in description. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.